When it comes to bridging finance, there is a lot of inaccurate information circling around the interweb. So this video is all about busting the myths surrounding bridging finance. Myth number one, you can't get bridging finance as a first-time buyer. Absolute rubbish. You can definitely get bridging finance as a first-time buyer and a first-time investor. The first thing that a bridging lender is actually going to look at is the deal itself. If you're following the BRR method, buy, refurbish, refinance, most lenders are actually going to look at what does the deal look like, how much money is going into the deal, what are the returns, and what's your exit strategy, i.e. how are you actually going to repay them, whether it be sell the property or refinance it onto a long-term mortgage. Now, after that, yes, they might look at your experience. Have you done anything like this before? Or do you have some assets in the background? Or do you have a good income that will allow you to maybe plug some gaps if something goes wrong? But most of the time, it's to do with the deal itself. There are bridging lenders out there that won't lend to first-time investors, but there are plenty out there that will lend to first-time investors and even first-time buyers. Myth number two is that bridging is more expensive than other forms of finance. Now, this is a tricky one because actually it can be quite tight. The first thing we need to discuss though is if you're comparing a bridging loan to a mortgage, that's not comparing apples with apples. Bridging finance and mortgages have a completely different requirement. Essentially, you're taking out a mortgage as a long-term financial requirement. That's why mortgages in Latin actually means till death, it's long-term. And bridging is meant to be a short-term option. You're not going to be taking a mortgage out when you require a bridge because you only need short-term finance. So that's the first thing to consider. The second thing, however, is that you actually only pay for what you use with a bridge. When it comes to bridging finance, there's no early repayment charges, and actually when you come to repay the bridge, you'll only pay for the interest that you've actually used. Mortgage interest is calculated on an annual basis. Your interest rate is an annual interest rate. Bridging finance is calculated on a monthly interest rate, so if you only got the bridge for 6 months, you may end up paying less interest on a bridging loan than you will do for a mortgage over a year-long period. The third myth is that bridging finance is only for professional property investors. That's not true. In fact, the original reason why bridging finance even came to existence was to bridge the gap between when home movers wanted to purchase their new property before they'd actually ended up selling their existing one. It was literally creating a bridge to allow them to purchase that property. So bridging finance is not just for professional property investors, but if you are a homeowner and you're trying to purchase a new property and complete on that before you sell your existing one, don't forget, these bridging loans are actually slightly different than your standard bridging loans for property investors because these bridging loans are FCA regulated. So they're going to take a little bit longer and you're going to go through a similar type of application process as you would do with a standard mortgage. And the fourth and final myth that we're going to bust today is that bridging finance is actually only for short-term use. Now, this is a bit of a left field one because I said earlier on that bridging finance is a short-term option. It is still a short-term option, but lots of people don't realize that you can actually borrow on a bridging loan for longer than the standard 12 months that most people believe that you can. In fact, there are bridging products out there that are up to 36 months, 3 years. These are potentially for those that are maybe trying to build their credit or for those that have longer term renovations that they are looking to do, or potentially it might even be for planning gain when it could take maybe up to 18 months to get planning permission on a site, whereas we would then refinance onto development finance to complete any renovations or development work that you're going to do. So even though bridging is only meant to be a short-term option, if you need it, it can be extended a little bit further than the standard 12 months that most people think it can be. So there's a few myths surrounding bridging finance busted. If you've got any questions on anything we've just been discussing, leave a comment down below. I will answer every single comment. And if you do want to get in touch and have a chat with me, I'll leave all my contact details down in the caption, and I look forward to hearing from you. Catch you on the next video.